Well, that's a look at the markets picture and what we're looking at this afternoon. Are you able to make any sense of it all? Are you just sitting on the sidelines?
Yeah, I think the cautious person would actually sit on the sidelines for this one, or, get involved in some derivatives with you selling. But I think, to just ripple effect from the rest of the economy, the world economy and the world stock markets. It started yesterday, and we saw, the US economic data was disappointing yesterday, and that filtered through to Asia this morning. There's also talk about more scrutinizing in the European zone. Banking sector, as well as their exposure to the sovereigns, to sovereign debt in those areas. And, that's also being highlighted again today. Also concerns about China's growth slowing, and that also adding to today's woos. And I think, it's just our markets trying to, trying to stay up. We certainly haven't gone down as much as other international markets. I see the FTSE was down about 2.88%. We were down by 1.8%. So I think we're faring a little bit better, but that's really because of gold, because we're more sensitive to gold, and our gold miners doing a lot more better.
You touch on those gold miners. Yes, we've got Goldfields and Anglo Gold managing to clock in some gains. Anglo Gold now just falling back 0.3%. Goldfields managing to hold on to that positive momentum. We're up 1.4% on that share price. Harmony, though, down 3.23%. So why the strong divergence when it comes to performance, where we know that all three of these players are so correlated to that rising gold price? And then, of course, the weakness we've seen filter through on the rand as well.
Yeah, we would expect it that Harmony would have been also up along with the rest of the gold counters today, but not. There was a report that came out that Goldfields, Anglo Gold, Ashanti, as well as Harmony could be facing what do they call it, as a class action suit for tuberculosis contracted at their mines. And I think that didn't affect Goldfields and Anglos, but it certainly did affect Harmony. And also, if you look at their results that came out this week, they had a contraction and their costs are very high. So I think the feeling is that Harmony is far more sensitive to South Africa specific issues, as and therefore that's why they will react far more to South Africa specific issues, whether it's strikes, whether it's impending lawsuits or whatever it is. So, I mean, that's really mainly what I could gather out of why Harmony is so down today.
Of course, to bear in mind that Harmony was the top performer on the top 40 index in yesterday's session by the close. You allude to South African specific issues and how that's affecting gold miners, specifically in the case of Harmony in this case. Overall markets, though, how are South African specific issues coming to bear? Or is it a matter of just global dynamic, the driving force?
Yeah, certainly global dynamics. We're at the mercy of the international markets and economic data coming out of the international playing field. We certainly are not focusing so much on what's going on in our space. I mean, the VIX has gone up quite a bit. It went to 48, the 48 level last week, Monday, and it's still now tracking back up again after yesterday's spike in the VIX. And that's more of a fear indicator for us than what the Savvy would be. Savvy has also spiked a little bit, is that you're sitting at year-to-date highs, but it certainly hasn't spiked it as much as the VIX. And if you see how our market has reacted, it's really based on what the VIX has done, an international fear gauge. And so, we're not really that sensitive. We've got CPI and PPI coming out next week, but I bet you that, most of the focus will be on what happens internationally, what is resolved out of the European zone, the banking sector specifically there, what the economic data in the United States is looking like. So it's certainly no longer just us playing in there. We're an emerging market. We certainly will, for a long time, be at the mercy of what happens internationally.
In the international arena, let's focus in on policy action and what is and isn't being taken, because it seems that confidence levels are sitting pretty low at this stage in terms of what the authorities can do to stem what is potentially looking like a dip back into recession territory.
Yes, yeah, the recession talks are back in the forefront again. We'll see. Germany and France came out with their growth numbers this week and last week, and they were also very disappointing and, really at the brink of perhaps the first contraction we'll see out of the two biggest economies in the Eurozone. So policymakers have to get involved there. There has to be something that is done to try and stave off a proper recession again, because I don't think, we can afford that again so soon in the markets. And, with the United United States with the kind of policy talk that's going on there. You know, it's just really so dependent on sovereigns right now, rather than more dependent on what companies are doing or what the real market is doing.
Taking a look at economic factors that come to bear on companies and company earnings moving forward. Here in South Africa, we've got wage negotiations that persist. How are you reading that scenario? Because, you know, it's symptomatic and becomes symptomatic of the mining sector right now. But how is it affecting you in the trading world when you're looking at the likes of an Amplats and an Implats?
You know, it certainly doesn't come in that much. It's more the commodity itself that would, you know, get traders to move the stock somewhat, or maybe more company-specific information such as earnings. The strike factor, of course, does, you know, weigh on our minds, and it's something that we do consider. But you know, it's just too far global, and you know, we're far more moved by international factors as well as commodity factors than those strike factors. But it's certainly something that we do keep an eye on.
Keeping an eye on the markets, of course, today it's the green spots that become glaring, you know, and the more, well, they stand out when you're looking at an overall red picture. And one of the stocks that certainly caught attention is that of Growthpoint. It opened in positive territory and continues with that momentum. We're up 0.75% on that front. Have you managed to find any motivating force behind that upward movement we're seeing on that share price today?
Yeah, Growthpoint was actually quite interesting this morning, and I think it's mainly because it's following the bond market, bond deals there, and the rental income expectations there. You know, from a trading perspective, you know, we do look at it as a more defensive stock. You know, the property sector has been a little bit more resilient. Well, the property stocks, let me put it that way, have been a little bit more resilient. But you know, as you mentioned earlier, it is a dark and gloomy day all around, and you know, those are perhaps some of the factors that some bargain hunters are looking for going in.